Okay. So let's get started again. I'm going to talk about the importance of the anchor chart. Now, there are two ways to do this. You can combine the two charts into one, and or you can have them separated. I do have them separated. There's a way to put a second chart in here and put the bars as transparent, so you don't see the second one, and then you can enter the indicators in this chart here. I'm not going to go through that because I never use it really, and I think that you can look for YouTube videos on how to set that one up for sure. What I do have here is the two charts for CL. Give me 1 second. I'm trying to set this one up. So CL opens at 9 a.m. and I do have, let me open the anchor chart here. And it depends on your strength. Money wise is what you can do. What I'm assuming here is that you are going with a $2,500 threshold. So again, the idea is not to risk more than 5% of your of that threshold into one single trade. So that would give you actually it would give you one contract, okay? Because one contract would be around $120 stop in this type of bar. So this one is the anchor chart. It's double. You see here that there's a 4-unit Renko there, and this the idea of having this chart up is that you would see the direction of the move and that would confirm what you are looking in your entry chart. Okay, so in here you would see that we are moving upwards or in the positive direction in the anchor chart. And so if we are above all of these moving averages in price and all the prices are stacking to the upside, we will see the stack Renko triggered. And this is actually just to see what, or just to take a peek of what is happening in this chart in regards to the price and the moving averages. Okay, so this one is just to make it simple. So I look at here, and instead of looking at this one or this moving average, that moving average, that moving average, and that moving average, it's an indicator that tells me at a glance if I'm above or they are stacking to the upside and the price is above it or not. Okay, so in here, you're looking for longs in all of this area before the market open, and the market opens at 9 a.m. And at 9 a.m., what happened is that it started to make a reversal. It failed to make a higher high right here, and it started to move down. And now in this area, we are in congestion. Okay, this as we said in the previous video, this here indicates that the moving average on the 18 EMA is crossing below the 34. The 18 is crossing below the 34, and we're looking at the 34 mostly as triggers for wicks out of the moving averages. Okay, so we have that one. That we have this one here, and then it moves down, it moves up, gives us a trigger right there, That one there is a trigger. And then we have one reversal. This one is actually a trigger in the higher time frame. This is not the entry chart. So it's just for direction. Okay, so then we have a really nice move to the downside all the way down here until 81.33 from 84.69. Let me put this indicator here. Hold on, let me fix that. And I'm gonna put this indicator here. So from this point on, there's a potential of 13, almost $1,400 right there, all the way to the to there. It's $1,400. Obviously, you may not take all of it, but that is the potential on the large bar right there, on the large bars on the 4. Okay. And then it started to retrace, and now we are in compression again. So a higher high or a high, and then a higher low, and then it's crossing above, and then it's actually from here it's moving again above the smooth 50, and then above all the other moving averages, and then you may have a trigger here in the anchor chart as well. Okay. So let's go into, and I'm gonna synchronize this one, so in that way we can make it a little bit more interesting. So not zoom in, but this one here, and we're going to make it global, and then here we're going to make it, oh come on, sometimes it is not gonna work. For some reason it's not gonna work. It doesn't let me do it. Okay, I will need to leave it like that, and I'm gonna try later to do this. Okay, so let's go to price action on Friday. So 9 a.m. right here, you see the background here is a yellowish color right there. And now at 9 a.m., if we look at 9 a.m. here also in the anchor chart, we are making I have the sun in the other side of my monitor, so hard to see for me. Okay, so here is what we have the at 9:20, 9:15, after the 15 minutes opening break, we do have the first week there out of the moving average. Okay, so and that one there is 9:15, around this area right here. So you do have a lower highs, lower lows. In the trigger, you may be tempted to take this one right out of the gate, and this one right out of the gate as well. And then after 9:15, you have this break right here. Okay, so that break happens in there. So the importance of this is that, you know, you do have all of this congestion where in your anchor chart, it's not really clear that you are going to go below those prices there until, I would say, that this point right there. Okay, so in the trigger chart, you could argue that that one is really when you get this double top here, and then you get this continuation right there, moved up, week out of the moving averages, wick out of, remember we saw the wick out of the smooth 50. It is visited up here, but really within after 915 really triggered, after 920 actually, really triggered that entry right there. Couple of other things. In here, we are above the momentum indicator. Okay, so momentum is really not in our favor. However, here we do have a reset right there. Okay, and that one there goes with that there. Almost exactly at the same time it triggers. And now you have one entry that went all the way down here. Okay, then moved up, three reversals, and then here where you have another move, 3 reversals, another move, 4 reversals, or 5, another short move, and then you started to consolidate all the way there. You do have some consolidation in this area, but you have a nice move right there, and then potentially right there, and then potentially that right there. Okay, so none of this, I mean, the move was pretty strong, and this is, I would say that this one is somewhat typical of crude. Those large move happens all the time. But these are 3 waves that are really, really in a trend. And if you see the larger time frame or the anchor chart, this one it's never stopped coming back down all the way through. It hit the pivot point right here. Okay, hopefully that's hopefully you can see that. Then let's see what happened in the anchor chart. The anchor chart here, so that's the move we took all the way through S1 actually in there, which is I'm sorry, this one here, S1M, or the mid for S1 is not S1, but it went all the way as this mid target and started to recover. Okay, so here you have a counter trend, a counter move, and then up, down. Still, we just have a crossing of price right here at 949, and this one here, all of this is counter. All of this is counter. 949 is actually when started to move up right at that point, right up here. Okay, so and then that break failed. This one is a trend reversal breakout in the higher time frame, but it actually came back and then give us a trigger to the upside right there. And so in the let me see if this one, no, it for some reason it's not giving me the option to synchronize it. Sometimes those things happen in. Okay, so here we do have VWAP up here though, so this one would be a nice target if we are below it and we have enough room to make a trigger. So here we are actually triggering there at 951, which is this trigger right there. So we are looking for longs from here on, and then in here you do have so we are above here. There's no really trigger of that one. Price is still below the moving averages here, so kind of risky to take that one. This is not a really clean setup, but it's reversing, so it's wait, and then you have one here. This one is clean. In the other thing is that momentum right here on this one is not really moving to the, no, it's not moving up. We the lines are below, but in here we do have a reset right there. We do have reset right there. So that one is a clean entry all the way through the VWAP. Now in here we do have a double top. So you have one top there and one top there. It's a little bit higher, but I would consider it a double top. And then up, and then hit this opening range. And then from here, this one, you need to be very, very careful. There are two attempts to enter that opening price for the, and then it slammed back down there. So in the anchor chart, really same thing, double top here, and it started to move down. We are in here, we are still above this moving average on the smooth 50, and right here we are crossing the SMAs. So right now we are waiting for a retracement. That retracement is happening right here. And what time is this? 10:09, 10:05. This retracement is happening here. It's triggering right there. And then in the entry chart, since it's slammed off of that opening price, overnight opening price, then started to move down and down and down, and found some support at the SM1 level. But I would expect this one to consolidate there. Boom, boom. Look at that. Okay, so these moves are, those move there. Not that clean, right? But you have that one there is the first one. And then in price, what we do have here is, from this one was the, which one was this one? $10.05. This one here to that is $200, and this one here, and this one here, that trigger to there is a potential $620. And we are looking for shorts here, and then crosses again. Moving averages are back to the bullish side. Now the anchor chart is telling us that there's some good room right here to the VWAP, and this is what we see right here. So there is a, there is congestion here for sure. 1134 hit the smooth 50 right there and came back up. This one is not really clean, actually. Went up again, failed to break on the VWAP, and then came back and slammed it again, looking for revisit this area right here and there. So you have that in the anchor chart. You have that rejection. Here is where the price comes back down, or the moving averages are crossing. Kept going. You have a wick there, and then kept moving down, 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 down. And so the anchor chart is giving you directions, and the trigger chart is giving you entries. Hopefully that's clear. So you do have sync from this moment on, from that moment on, where price is moving down and then triggers are happening to the downside. 1240. And then consolidation. I have it marked here at 2 p.m. On crude, and after 2 p.m., very, very seldomly, this one was a really good move in the afternoon. Sometimes it happens in the afternoon that crude moves to the upside, actually. I'm sorry, I think that I did not turn off the music. Probably that one is bothering everyone. Hopefully not. Okay, I forgot about that. My apologies. Okay, so weeks out of the moving averages all the way here, all the way, and then the most important one for me at least is the 34 EMA, which is visited several times, 1, 2, 3, 4. Then when it went a little bit above and then triggered the 50, but this one here triggered the 34. This one doesn't, this one doesn't. This one triggers the 34. And then this one is the 34. This one is the 34. This one is the 34. So never crossed above the 34 EMA until this point's here and this point's here. But you do have continuation all the way down there. Okay, so hopefully that makes sense. I'm gonna check the video once I really apologize. I thought that I was that I had the music turned off, and hopefully that didn't bother the video that much. I'm gonna check it out, and if not, I'm gonna make another video talking about anchor charts and trigger charts. All right, I think that would do it for today. Thank you so much for watching, and don't forget to like the video. Remember, there is a promotion for Apex that ends up on Tuesday, actually, Tuesday 11/7. Hopefully, you guys have a great rest of the weekend, which is only the afternoon of today, and see you during the week. I'm gonna make some videos as well. Thank you so much for watching, and see you next time.